My name is Emma Whitford. I'm a reporter with Forbes. I cover education. It's always really exciting for me to be here and meet all of you and learn what you're working on. Not only because it's very inspiring, but because it gives me lots of story ideas, which I love. So it's great to be here. We're going to be talking today about investment in the education market. And with me today, I have Kelly Fuller, who is Managing Director and Head of Education Technology and Services at BMO Capital Markets, and also Michael Moe, co-founder of GSV Asset Management. And we're going to jump right into it today. We're going to jump right into it and try and cover as much ground as we can. And the first question I wanted to pose to you is, a lot of times when people think of capital investment in education, they think of ed tech. But a lot of the folks in the audience today aren't necessarily in the tech space. They're working for public schools, charter schools, they're educators, operators. So can you talk a little bit about how investment in education is still relevant to them?
Sure. So I'll take the first crack at this. So a lot of people, you're right, do talk about ed tech as this big, sexy thing that if you're not in ed tech, sort of you're not worth my time. But I will say, what I do is across the spectrum of both across both services and technology. And what I have seen in the past few years, particularly when we talk to investors, is a greater focus, especially for those that are, more four-wall businesses. We're operating early childhood education centers. We're operating K-12 schools. Is how do you talk about the use of technology to differentiate your businesses and to drive efficiencies? So we see a lot of talk about, again, how we're using technology to drive better utilization in our classrooms from an enrollment perspective. How do we use technology in the classrooms to drive better student outcomes? And that's both in content and using data and student information. How do we use technology to drive and increase parent engagement? If we think about ECE, early childhood, safety is obviously a big consideration for parents. So how do we use, cameras or those parent engagement tools to make you as a parent feel like your child is safe, which, then translate to a competitive differentiation for that operator. So while you all may not be at tech, there are ways, again, to talk about your implementation and use of technology to drive those business performances.
Yeah, the way I look at it is, from an investment standpoint, the greatest investment opportunities is where there's a problem. The bigger the problem, the greater the opportunity. You look at it in a global marketplace and a knowledge-based economy, what your education makes the difference not only for an individual, but for a company and, for that matter, a country. So I can't imagine, just as a general idea, a more fruitful category to be looking at. And how we think about it, really is that the alignment of interest of focusing on the companies that have the greatest educational impact, we think will have the greatest financial returns. And so while ed tech is exciting because you have these potentially very scalable, kind of exponential growth models, the fact of the matter is, the physical schools, they have shown to be, excellent businesses too if they do a good job. So Lord Anglia, has $500 million of EBITDA. Gems in Dubai, has something approaching, $500 million in EBITDA too. So these businesses done well can be extraordinarily successful. And again, the most important focus is the return on education. And if you get the return on education right, the financial returns will follow.
Yeah, I really like what you said about education having so much opportunity as a market. And as we all are very aware, the education market has changed a lot in the last 5 years. And I'm wondering if you can talk a little bit about what opportunities or perhaps weaknesses emerged from the pandemic over the last 5 or so years.
Yeah, so if you look at the education technology category, which really barely existed 15 years ago. In fact, some of you maybe have been to our summit in San Diego. So the first year we had that summit, the total amount of venture capital in the education technology business was $500 million that year, which we thought was amazing, because if you added up all the investment into education technology from the history of mankind, it probably didn't add up to $500 million. Well, in 2022, at the height of the pandemic, it was $21 billion was invested. that year. So we look at that, the shift was going on for quite some time, but we think what happened during COVID really was a game changer as it relates to how people looked at education, both online as well as physical. And so we think it's so dramatic. We say there's BC before Corona and there's AD after the disease. And effectively, you had 1.6 billion students that were thrown in the deep end of the online learning pool and told to sink or swim. Some sank, some crawled to the edge of the pool, got out, never will go back in. But a lot flailed around a little bit and got the hang of it. And I think this change, this shift, is pronounced. And so what we thought, digital education, we thought was a $1 trillion market by 2035. We now think it's a $1 trillion market by 2028. So it's very, very significant. And I think, but also just the scrutiny that parents all of a sudden, you saw what happened in Virginia, but parents all of a sudden are saying, because now they're home and they're seeing what's going on with their kids, and they're saying, okay, this isn't right. Mm-hmm. And so if you look at the whole choice movement, I think it's got a major boost from all this, and you're seeing it in every kind of form with public opinion that is sky high for it. So it's great.
Yeah, I would agree. The pull forward of growth in the sector was incredibly pronounced. I mean, before COVID, a big driver of growth within the education sector was digitization and moving things online. And now, while there's still going to be growth in digitization, moving things online, the sentiment is, okay, well, that's sort of done. We've done that. Everything has been pulled forward. So, the investors that I speak to, they're trying to figure out, well, how do we think about longer-term growth in the sector? Because that was a big growth driver going forward. So I think that's one thing that has changed. And in some instances, we've actually seen a reversion back to print and in person, particularly in K through 5. Because kids and parents they're just so done with looking at screens, and we got to get back to some basics here, and just getting books back in and papers back in the kid's hand. And I would agree, just around, I'll call it just parent accountability or holding the schools accountable because they are more aware of what their children are doing in school. And I think that is going to drive more accountability in school districts going forward, which is a good thing, obviously.
Yeah, so we've talked about what has changed in the last 5 years. It sounds like investor interest in education isn't going away. So if you look into your crystal ball, what trends in the education market do you foresee coming in the next 5 years?
I mean, the things that we see people asking us about, and I know there was a panel on it earlier, and is, if AI, that was sort of I feel like everything at ASU GSV in April was, what is AI, how is AI going to impact the business for better or for worse? What businesses are going to suffer because of it? So, where should we kind of be trying to avoid those pitfalls? Where do we think that can drive more efficiencies? So therefore, where should we be putting more dollars behind? I think the other area that we see a lot of interest in is really, this was before COVID as well, was just reskilling and upskilling the workforce. How do we think about providing opportunities for individuals that, and not even reskilling and upskilling, but maybe want alternative pathways to the workforce? There are obviously many students that are pursuing careers that don't need a 2-year or 4-year degree, and there's nothing wrong with that. And we should be thinking about better ways to be providing those pathways to children earlier, and not stigmatizing it. And how do we think about creating those pathways when they're in high school so they graduate with a better choice of options?
So yeah, AI I think is. I'm tired of hearing AI, but that said, we say AI is like air. It's ubiquitous, it's invisible, and you're going to need it to live. And I think as it relates to learning, it's going to be embedded in basically everything, which, again, if done right, can create a more personalized, individualized educational experience, accelerating where you're proficient, going back where you're deficient, and how you best learn. So that is a mega theme for sure. The knowledge as a currency is another theme that we believe in, which sort of plays into what you were just saying, which is this idea that the degree historically was the ticket that gave you the opportunity for future opportunities, and that's not going away, but it's going to be augmented by a variety of other ways that people are able to represent what they know. So really have a currency with that, with an experience and other ways that you're acquiring knowledge. Another area that we think is important, which again I think is aligned with what you just said, is what we call higher ed, HIRE ed, where historically you had these kind of silos between learning and earning. I think increasingly you're going to see those integrated, merged, and again there's some really terrific opportunities that are in that. Everybody's talking, we've been talking about virtual reality and other and games. So this invisible learning, where you're learning by doing things you naturally want to do and are engaged. You can't learn if you're not paying attention. So games is a great way to if you can do it right, you can learn skills and acquire knowledge of that way. And virtual reality, has been something we've been hoping and looking for forever. But you're starting to see things like this dreamscape that we've highlighted and really ASU accelerated. I mean, the results that they're getting are unbelievable, and it's totally fun and cool. So that's if you can create that kind of experience, that's really good. And I could go on and on, but I don't want to bore you. So
yeah, great. So I think we all understand that the education market can sometimes be notoriously slow when it comes to change and innovation. But nonetheless, there are lots of innovators in education, as evidenced by everyone here in the audience. So what should investors keep in mind when they're looking at the education market through return on investment lens, where you might not see those returns as quickly as you would in other markets?
please.
I think there's a couple things. One, as you all are sitting there, potentially having conversations with investors either soon or down the road, it really is finding the right partner that is aligned to your mission and values and to your horizon. I think as well from investors, there's a couple different ways they can think about their returns that they have to deliver on. I mean, they have people they're beholden to, their investors. How can you think about how fast the business is scaling? So are there opportunities 3, 4, 5 years down the road that I can bring in another investment partner and return capital to my investors while still maintaining invested in the company, because I see a very long-term goal here. Depending how profitable the business is, you can certainly think about doing a debt recapitalization once you're more scaled. But I think, again, going back to my first point for you all, I think it really is, you got to find the right partner, because if you have no alignment on goals and mission and your own outcomes and what you're driving at, it's not going to be a great partnership, and that really is what it needs to be from day one.
So the way I think about it is, capital's pretty fungible. I mean, it flows to where it gets the greatest risk-adjusted return, and so obviously different people have different thresholds, I guess, for that. But it all goes back to what I think said before, for any business in the education business, which is, if this company is delivering on its promise to parents, students, faculty, whatever, that is improving learner outcome, helping people get this opportunity to participate in the future by having the foundation of quality education, now the returns will follow that. And so patience, I don't know what patient capital really is. I know capital that's focused on, aligned with outcomes and that deliver on the promise, because I think the easiest thing to happen in education is if you don't, you're dead.
Mm-hmm. Yeah, and both of you have talked about how important impact is for these nonprofits and businesses, but how much does that correlate with scale? Do you need to be scaling up in order to increase your impact, or not necessarily?
In my view, yes. I mean, the greater the impact you can have, the greater returns that you can have. Mm-hmm. So, and I use this term and I get a lot of grief for it now, but I won't. In fact, I'm not going to use it. It's actually especially inappropriate today. So just trust me. So we'll talk about it later. You can criticize me individually as opposed to. So no, I think and again, what we're looking for is companies that truly can have huge scale impact. Mm-hmm. Businesses with network effects. I mean, you look at a business like Coursera, and we were fortunate to be an early investor in Coursera. They've got 140 million students on its platform. 95% of them don't pay a dime, to have access to this education that they're using. Some are learning it just for the sake of learning, but most are using it to get ahead and to be able to get a better opportunity. And so that business is being able to create a $3 billion market cap business by providing a high quality, low cost, often free educational experience, which we think is phenomenal. With the different opportunities and the doors that are being created, opened by that, and yet the financial returns have been terrific as well.
Yeah, I mean, obviously, I agree that the more impact, the better. A lot of times we work with companies to actually figure out how do you define your impact, because it's going to be different for different types of businesses and for different types of students that you're focused on. How Nord Anglia thinks about their impact and outcomes is going to be very different than a company that's, for example, focused on like dropout recovery. How do you define impact and outcomes for those very, very different types of student groups? And then how do you drive that impact? How do you scale that impact? And then obviously, then delivering those returns to those investors. So I think that's also very important for people to understand too. It doesn't have to be, there aren't 3 sets of, impacts that all investors look at. Big part of what you all need to do is how do you define that on your own to tell your own story?
Yeah, and I'm also curious for the folks in our audience that maybe haven't talked to a lot of investors yet but would like to. Do you have any practical advice for them on how to prepare those conversations?
I'll let you start. You do more of this.
I think most important is to be authentic. And I think often people think that they got to be somebody that they're not, so that shows through very quickly. So being authentic is really important. I think having your elevator pitch down so you can be, often people want to tell you how that watch is built instead of what time it is. I think initially, certainly investors want to know what time it is, and then you can get deeper what the question is as they get to learn kind of what the company's all about. But again, so I go through meetings sometimes. I have no earthly idea what the company even does, and that's a problem. So what I would do, just the real practical thing, is when all said and done, I don't care what investors tells you, they want to know 5 things about you. They want to know who you are and why should I bet on you. So I call it the 5 Ps. First P is people. The second P is product. What does your company do? What's your claim to fame? What makes you special, different, or great? What you can be the leader at. Third P is potential. How big can this become? What are the mega trends or tailwinds that are creating the opportunity? Fourth P is predictability. How visible is that growth? What kind of operating business model do you have? And the 5th P is purpose. And that is why you're doing this. And we actually had 4 Ps for a long, long time. We added a 5th P because what we certainly see is the best entrepreneurs and the young entrepreneurs today, what motivates them is not just how do you create the most revenue. It's like what kind of impact are they having for society? Mm-hmm. So I like to say the best businesses of tomorrow are going to have the ambition of a for-profit and the heart of a not-for-profit. And that's what we're looking for, those 5 Ps.
Yeah. And then what I would say is sort of once you get past that first layer is, don't be afraid to be honest about where you're struggling and maybe some of the road bumps that you've come across. If there are skeletons in the closet, they're going to come out. And it's better to be upfront about that and say, hey, we have problems X, Y, Z. We tried this. Maybe it worked, maybe it didn't. But, again, part of the reason you're bringing an investor in is to bring in their expertise, their network, and their know-how to help you solve some of those problems. So, in addition to obviously authenticity, I think humility and honesty, go a long way too.
Yeah, I'll just add a few other things. Those are good. So for example, you often say, who's your competition? And if the answer comes back, well, we have no competition, that says one of 2 things. You don't know your business very well, or secondly, you're in a really bad business. So that's, it's things like, the thing, this is the holy grail of, it's just these cliches start to grade, just try to avoid that. As I said, be authentic and who you are, not compared to somebody else.
Great. Well, thank you both so much. We're unfortunately at times running a little short today, but that was really interesting. Thank you, Michael and Kelly. I really appreciate your time.
Absolutely.
Thank you so much.
Great. Thank you, everyone.